Hello all. Today we will be looking at the methods of motivation. So we have different methods of motivating employees. We have financial rewards, non-financial rewards, and also introducing different ways to give job satisfaction. However, this video will concentrate on the financial rewards. So it is the responsibility of management normally, and more specifically the human resource department, to motivate the workforce. Because as we know, a well-motivated workforce helps to raise productivity. The employees who are well motivated tend to have fewer days off and are less likely to have grievances. This which result in strike action. So here looking at the financial rewards. So financial rewards, when we are looking at financial rewards, what we can say is that pay may be seen as the main reason why people work. But there are other reasons as well. However, pay may be used to give incentives to employees, to encourage them to work harder or more effectively. Here, financial rewards refer to those forms of cash and non-cash pay to workers, which are often used to motivate workers to increase their effort. When we look at the different theories of management, of motivation, and the different theorists, many, for example, Taylor argue that money is the sole motivator to motivate people. Taylor's views of the economic man, and whereas Herzberg theory, he only sees money as an important factor for preventing job dissatisfaction, but not as a motivator. So if money is an important motivator, then managers need to consider how best to use it to achieve a well-motivated workforce. Then we have non-financial rewards, which we will be looking into much more details in the next videos. So these are methods used to motivate workers that do not involve giving any financial rewards. Let us now look into more details about the different financial rewards. So payment can take various forms, and the most common one are, for example, we pay employees wages. So in wages we also have time and piece rate. Then we have salaries. Then another way of financial reward is to give commission. Next we have bonus schemes. Then we have profit sharing. Then we have performance-related pay, and lastly we have share ownership. So these are the different forms of financial rewards. So the first financial reward is wage. So a wage is a payment for work usually paid weekly or on a fortnightly basis. Sometimes wages are in cash or sometimes into the bank account. So the workers get paid on a regular basis and does not have to wait for long for some money. And wages tend to be paid to manual workers, such as those who work in a warehouse, for example. One advantage of wage is that if the employee works longer than their normal hours, they are usually paid an overtime. This is their regular payment amount per hour plus an extra amount. So this is an incentive, therefore, to work additional hours when required by the business. However, there are drawbacks too. As wages are paid weekly, they have to be calculated every week. And this is time consuming and it costs money. And also, wage clerks have to be employed to perform this task. So next we have time rate. So time rate is payment by hour, payment for a period of time. For example, if an employee is paid $10 per hour and they work say for 40 hours, then they will be paid $400. So the advantage of time rate is that it is easy to calculate the workers' wages. And also the workers knows exactly what they will be paid for working for a certain period of time. However, there are drawbacks too. The hours of work are recorded on a timesheet, which must be filled in and used to calculate the wages by the accounts department. So this system takes time. And then whether you are a good or a bad employees, you will be getting paid the same amount of money. And also often supervisors are needed to make sure that the workers keep working and producing a good quality product. This is expensive. Why? Because supervisors are needed by the business. Normally, time rate is often used where it is difficult to measure the output for the worker. For example, the bus driver or a hotel receptionist. So next is piece rate. So piece rate, this is where the workers are paid depending on the quantity of product made. So the more they make, the more they get paid. A basic rate is usually paid with additional money paid according to how many products have been produced. So piece rate can be applied also to bonus system where employees who produce more than a set target of output can be rewarded. Another advantage of piece rate is that it encourages the worker to work faster and to produce more. However, workers may concentrate on the quantity, for example, in making a large number of products and ignore the quality, producing goods that may not sell very well because they are of poor quality. So this usually requires a quality control system, and this is expensive. If poor quality goods are produced, this can damage the reputation of the business. Next disadvantage is that workers who are careful in their work will not earn as much as those who rush, which may not be seen as fair. Therefore, friction amongst employees may be caused as some will earn more and others less. And the last one is that if the machinery breaks down, the employees will earn less. Because of this, workers are often paid a guaranteed minimum amount of time. The next financial reward is salary. So a salary is a payment for work, usually paid monthly. With a salary, the workers are paid a fixed amount per year, which is usually paid monthly. So this method is best used for workers whose work effort is not directly linked to production. For example, we have supervisors, managers, and professional staff. So the advantage of this payment method is that workers do not receive more pay if they have to work longer hours to complete the task. And the main disadvantage is that salary is not linked to the worker effort or the amount produced. So salary are usually a standard rate, that is a set amount of money, but workers may get more money if the following rewards are also added to the basic salary. For example, commission, profit sharing, bonus, performance related pay, and share ownership, which we will be looking in the next slide. Commissions are often paid to sales staff. The more sales they make, the more money they are paid. It is similar than piece rate. This encourages the sales staff to sell more, as many products as possible. This should be good for the business as sales may increase. However, if the sales staff are very persuasive and encourage people to buy goods they don't really want, then the business may see its sales increase only in the short term and then fall again as it gets a bad reputation. So it can be very stressful for the sales staff because if they have a bad month, it will mean their pay will fall. Profit sharing. So profit sharing is a system whereby a proportion of the company's profit is paid out to the employees. So employees receive a share of the profit in addition to their basic salary. So this will motivate the workers to work hard. Why? Because they all receive the share of the profits earned by the business. The rest of the profit will be paid as dividends to shareholders or retained by the business. Profit sharing is often used in the service sector where it is difficult to identify an individual employee's contribution to the increased profit, but they will all benefit from more productive work. However, the disadvantage of profit sharing is that any profit given to employees will definitely reduce the dividends to shareholders or the amount available to be reinvested in the business. So therefore, conflicts may arise. Next is performance-related pay. So here, this is where the workers' pay will depend on their performance. So managers will be setting targets that the workers need to achieve. So the employees' pay is linked to the effectiveness of their work, that is to their performance. Again, often used where output cannot be readily measured. For example, for teachers, for police officers, for managers, or for health workers. So to assess the performance, businesses can use a system of what we call appraisal. So what is appraisal? Appraisal is a method of assessing the effectiveness of an employee. Appraisal is where the employee's immediate superior observes their work, talks to the workers' colleagues, and then carries out an interview with the employee to discuss their progress and their effectiveness. And training needs to maybe identified at the appraisal interview, especially if the employee is underperforming. And this should help to improve the employees' effectiveness in the future. However, the disadvantage of PRP is that if the targets set are unrealistic, the workers will be demotivated. So the next financial motivators is share ownership. So share ownership, this is where the share of the company are given to employees so that they become part owners in the company. So employees are given some shares in the company. So this encourages them to work hard as they will receive dividends if the company does well. Also, the share price will increase if the company is doing well, and so will the value increase the value of their shares. So it may also improve employee loyalty as the employees will be having a greater sense of being part of the company. And the last part of today's video is on bonus. So what is bonus? Bonus is an additional amount of payment above basic pay as a reward for good work. So a lump sum is paid to workers when they have worked well. It can be paid at the end of the year or at intervals during the year. So these are the different financial rewards that we have. So in the next video, we will be looking at the non-financial rewards. Thank you.